Today on the podcast, we are covering a massive $500 million raise. You wouldn't guess who it is. It is, drumroll please, Databricks, who has raised this $500 million. This is boosting its valuation to $43 billion, despite a lot of late-stage companies really struggling right now. I mean, we even have people like Instacart who are tanking on their IPO, or I guess their IPO that's set. The valuation is going down significantly. We have companies like Better.com that went from, just completely tanked in their IPOs as well. So a lot of these later stage companies are seeing a lot of pain when it comes to their valuations. Databricks is not one of them. It is flying high in the sky. As you may remember, they recently acquired Mosaic ML for over $1 billion. I believe it was $1.3 billion. So it's kind of interesting, right? They go acquire a company for $1.3 billion and then they go raise $500 million. It's definitely very interesting. Although you do know those acquisitions are not always as cut and dry as $1.3 billion in cash, right? So it could have been 50% of that is stock in Databricks, which they expect to go up, which, as you see, they just raised this big round of funding and their valuation went up. So for people that are from Mosaic ML, taking that deal probably wasn't a bad idea, but it's interesting because it's acquiring Mosaic ML costs money, but it also boosts their valuation. And a lot of times when you do these acquisitions, it's the company acquiring, its stock price goes up more than the cost of the acquisition in the following, days or months or whatever. So seems like a good move. Today on the podcast, we're going to be diving into everything that is happening with this big round of funding that Databricks is doing, why they're doing it, and we're going to break down some really interesting things I'm seeing in the space because of that. So let's dive into it. Welcome to the AI Chat Podcast. I'm your host, Jaden Schaefer. If you are interested in seeing really interesting AI use cases, make sure to follow me over on x.com, formerly Twitter, as I will be sharing some really cool use cases of AI, and I kind of, retweet some of the greatest things I'm seeing in the space every day. So make sure to follow me at Jaden_AI. I'll drop a link to that, but also my handle is in the podcast cover. I would love to have you in the community. Have you ever wanted to start your own podcast? I record and publish podcasts on a platform called Spotify for Podcasters, and I absolutely love it. Essentially, you can upload from your phone or computer, and it distributes to every platform that plays podcasts. They support video podcasts, and you can make money on the platform with ads or even podcast subscriptions, something that has made my life so much easier as a podcaster. So if you're interested, I highly recommend you give it a try. You can download the Spotify for Podcast app or go to spotify.com/podcasters to get started on your podcast today. So in a move that really defies current trends in startup valuations, Databricks, which is a frontrunner in data analytics and artificial intelligence software, recently closed their Series I funding round, amassing over $500 million. Like I said, their valuation is now at $43 billion. The funding round is notable, especially as a lot of other late-stage startups, like I was mentioning, have seen their valuations slashed due to a funding slowdown. So this doesn't seem to apply to Databricks. The last time the company had its did a round of funding, I think was actually back in August of 2021. It got $1.6 billion, and it had a valuation of $38 billion. So now it's up to $43 billion. I'm assuming their valuation actually went down from $38 billion after that round because they did that in 2021. So they probably tanked a little bit. Then they've done a lot of good plays and bumped the valuation up, and now we're able to raise at an increased valuation. So big kudos to them on getting over that valuation slump that most companies have been stuck in. The additional $5 billion really kind of tacked into the latest valuation indicates that not all of the ships out there are sinking with the tide. So the investor lineup for this Series I round that they just did was a bunch of kind of pre-IPO and strategic funding. They had T. Rowe Price, Morgan Stanley, Fidelity, Franklin Templeton, among a bunch of the investors that were kind of filling the pre-IPO quota. And this, I think, is suggesting an anticipated transaction to the public market. They're raising a ton of money. Their valuation is going up a lot. Once you get into the 40 billions, you're getting pretty dang close to an IPO. I think Instacart, their valuation recently kind of tanked, but they're looking at doing something like $27 billion if the numbers I was seeing recently are accurate. So, you can say that is definitely a household name, and Databricks is not, but Databricks will be quite a big player in the space, and so I think this is going to be really interesting to see where this goes exactly. One other thing I will say is that on the strategic end, they had Capital One Ventures and Nvidia that also put some money into this round. So it looks like they're also grabbing some really solid, strategic partners. I think the partnership with Nvidia is definitely not a surprise. Databricks has kind of been doubling down on its AI capabilities, contemplating its traditional strength in data and machine learning software. And Nvidia concurrently is witnessing, heightened demand for its AI-driven chips and software, so much that, countries are reportedly working to secure chip supplies for their own economic interests. It's like an economic interest thing. You're seeing the US block certain chips from Nvidia from not being able to go to China and other places because it's like a national security thing. So in addition to all of these new investors, I think you also had private investment firms like Andreessen Horowitz and Tiger Global also participated in the Series I funding. So really, they had all the big players in the space. How has Databricks managed to kind of secure a quote unquote up round in the landscape, which is full of investment strategies and people that are a lot more conservative, looking for more conservative revenue multiples. So according to the company, its revenue run rate for the quarter ending in July 31st exceeded 1.5 billion. And it also has a global customer base exceeding 10,000, with 300 of those clients contributing at least $1 million in annual revenue for its software and services, right? So they have over 300 clients paying at least $1 million in annual revenue, right? $300 million, boom, right there. They have 10,000 clients. These guys are printing money right now. So while some earlier data hinted at slowing revenue growth, Databricks contends that its fiscal second quarter saw the, quote, strongest quarterly incremental revenue growth, end quote, in its history. So such performance, I think, is making investors really bullish about the company's potential to surpass even its current lofty valuation once it goes public, right? So this valuation isn't the end of, I think, where we're going to see Databricks rise. I think post-IPO, all things remaining, Databricks is going to see some solid growth into the future. So, however, I don't think this means that Databricks is in a rush to make an IPO, given its effective revenue multiple of 29x. The company's pricing seems slightly high for the current market. And I think that this implies a strategy of continued growth to justify its current valuation once it hits the public market, which is kind of signaling a deferred IPO. So I think the new influx of capital seems less like a lifeline and more like an enabler for Databricks, which is hardly scraping the bottom of its cash reserves. It has a ton of cash. It's making a ton of cash. And I think the additional funding may very well offer the company the latitude for other strategic maneuvers. It has this massive AI market. And I think the fresh $500 million is going to serve as a significant booster for Databricks' kind of competitive ambitions. And this is also actually after I've recently seen a report saying that almost 50% of CEOs said that AI was one of their biggest spending expenses that they're forecasting for in the future. And so I think that Databricks is going to get a ton of that cash, and we're going to see this company continue to climb in the future.
This episode is brought to you by Shopify. That's the sound of switching your business to Shopify, the global commerce platform that supercharges your selling. Harness the best converting checkout and same intuitive features, trusted apps, and powerful analytics used by the world's leading brands. Stop leaving sales on the table. Discover why millions trust Shopify to build, grow, and run their business. Sign up today for your $1 per month trial period at shopify.com/tech23.
Thank you for listening to the AI Chat Podcast. If you enjoyed the podcast, I'd appreciate it if you rate me wherever you listen to podcasts. And if you're looking for an innovative group of AI enthusiasts, make sure you check out our Discord channel and also our Facebook community. It's obviously a lot more interactive than a podcast, where we can actually share software tools, prompts that we're using in everyday AI. I'll leave a link for those in the description below.